Michael, we're seeing a little bounce in gold this week ahead of the FOMC meeting. When we get the result there, do you think we'll see more of a bounce?
I think it's very possible, but I think it's very much dependent upon what happens with the rupee in India. Now, I think this is a very underestimated relationship. People look at gold and they think of it as an inflation hedge. The reality is gold is very much dependent on the direction of the rupee in India. India, which is at the margin essentially the largest buyer of gold among most countries. Now, if you look at gold relative to the rupee since about mid last year, the two have almost been the exact same, meaning the performance of gold and the performance of the rupee have been in lockstep. Now, if the rupee is able to strengthen, which I think is very likely, on this rotation that's happening into emerging market risk assets, we're starting to see some of that. Rupee strengthens, what does that do? If you're in India, gold now has become cheaper in your currency. That increases the demand for gold. That means gold across the globe starts rising in price because the marginal buyer in India now is able to afford more of the precious metal.
Now, the GDP in India is starting to slow down a little bit. Is that a concern at all?
No, I don't think so, because the market really is now pricing India purely on these reform measures that Prime Minister Singh has been trying to push through. And that's a major, major thing. You know, most of these emerging markets have had problems with capital inflows from foreign money. Now, if you make it a much more friendly environment for foreign money, which is what Singh is trying to do, that alone means that whatever past data for India is going to be meaningless. The market's going to look forward. Money will convert into the rupee. Rupee strengthens. Again, going back to gold, probably makes gold itself perform well.
So what's the play here? Do you buy it now or do you wait for that action in the rupee? And do you buy it in rupees or US dollars?
No, I think you buy it in US dollars, but I think it's one of those things where I get the sense with gold that people like to buy it very quickly. I don't think it would be a spiky type move, meaning if that gold is destined to return to some form of leadership, it's probably going to be a trend as opposed to just a few day phenomenon. So I think it's okay to kind of average in.
Okay, so you could take your time with that. And for 2013, you think gold is something you want to be in?
I think in general 2013 is going to be the year where what I call dividend sanity truly ends. Dividend sanity, which is this love for income, love for dividends. And what you see is a comeback in the cyclical trade, which on a comparative basis, capital appreciation is far cheaper to get than income. Right? Now, if that happens, if that cyclical trade happens, emerging markets do well, commodities do well, likewise gold probably does well.